Hey everybody, welcome back to the channel. Elon Musk and Twitter, the saga continues, and it is time to go deeper into this. We just did an episode on Money Talks, 32 minutes today, dedicated to Elon Musk and Twitter. It gets juicier and juicier, and I'm really excited to get into it and sort of break down what's happening right now. Now, why is this story important? If Elon Musk is able to acquire Twitter, it will be one of the most craziest hostile takeovers that has ever happened, really in the history of business. We haven't seen a major hostile takeovers happen since Carl Icahn really tried to take over Netflix, in which Netflix deployed a poison pill strategy, which is what this video is about and what we're going to get into today. But it would be pretty interesting to see it happen. It's like business news that is just important. You've got to cover it because if it happens, then it is going to change the landscape of Twitter and potentially social media forever. So first of all, let's get into the technical definition of what a poison pill strategy is, and then I'll give my perspective on it. A poison pill defense strategy, officially known as a shareholders' rights plan, allows existing shareholders to purchase additional shares in a company at a discount. It makes the buyout costlier for the other party, effectively diluting its ownership per interest. The mechanism, developed in the 1980s, is commonly adopted by companies in hostile takeover situations. So let's imagine that Twitter's share price right now was $40. Twitter has determined the percentage threshold for a hostile takeover to happen, or for someone to cross that percentage threshold, which would initiate the poison pill strategy, is about 15%. Other companies have chosen to make it higher or lower. It really just depends on the company. So if Elon Musk, who has around 10% right now, 9.8%, if he gets to 15% ownership of the company, let's assume Twitter's at $40 when he gets to 15%. Twitter will allow shareholders to buy Twitter stock at $20, around half of what it's trading at currently. So effectively, you get a 50% discount, which is a really good arbitrage, because if you buy, 1,000 shares at $20, you pay $20,000 for it, but it's worth 40, and then you can sell it, you make $40,000. Now the problem is this has to dilute all shareholders, which is going to lower the price in general when you dilute shareholders. Why is it going to dilute shareholders? Because at the point where you are offering shares at a discount for 50%, the only way you're able to offer it at that discount is if you create more shares, right? You don't just take other people's shares, you have to create them out of thin air, which creates dilution. It makes the existing shares you have worth less because now the entire pie is bigger, so your percentage of that pie has to go smaller if the entire pie gets bigger. As a result of that, if Elon Musk was trying to buy 15% and he gets 15% and then he gets diluted by a bunch of people buying the stock price at a lower price, which is going to drive the stock price down because that's diluting and that's lowering the price for a bunch of shareholders that are then going to sell for the arbitrage between 20 to 40 or 20 to 35, whatever it may be. Then Elon's going to have to buy more and more shares to get his percentage to get to that threshold of 15%, almost making it impossible for him without wasting a ton of money of him buying stock that's like really not that valuable anymore because of all this dilution. This is the poison pill strategy, and it's a very unique strategy. I hadn't heard about it before. I'm sure a lot of people hadn't heard about it before. That's kind of the unique thing about business and stocks and investing in finance. That's why I like covering that type of news, because you discover all of these unique strategies, all of these unique governance structures that have been put into place or that have been innovated over the past 20, 30 years in order to actually make companies run efficiently, effectively, and meaningfully, and to stop bad things from happening or perceived bad things. Now, a quick side tangent, it also brings into question how effectively a DAO could possibly run, a decentralized autonomous organization, which is the big group of new new ownership classes in Web3. These are companies that aren't companies, but more so community owned. It brings into a lot of question how that could actually happen when you see things like hostile takeovers happen and you see these defense strategies in place. A lot of them are in place for good reason, so I'm not sure how well a DAO would do if it needed to do that. This brings up into question what Netflix did when they did a poison pill to fend off Icahn. So this is an article from November 5th, 2012 on CNN. Netflix on Monday says it has adopted a stockholders' right plan, which is basically what we just talked about, designed to prevent activist shareholders from launching a hostile takeover. The plan, known to investors as a poison pill, would kick in if an individual group tried to buy a sizable chunk of the company without approval from Netflix's board, which is kind of what Elon did, right? He just bought 10% of the company. If that happened, Netflix can now use a technical maneuver to flood the market with new shares and make a takeover prohibitively expensive. This happened when Carl Icahn bought around 10% of the company in October 2012. Icahn set off Netflix's alarm bells when he said the company would make a tasty bait for a giant tech company in the video business. So basically he was buying the company to flip the company because he thought it was massively undervalued, but he didn't think it was being run correctly, but he thought a lot of other companies could buy it. The poison pill kicks in if an investor acquires 10% or more of Netflix shares, or 20% in the case of institutional investors like Icahn. So if an institutional investor like Icahn bought 20%, that's when the poison pill would kick in. Currently, he had a 9.9% stake in the company. Icahn lashed back Black Monday, saying that any poison pill without a shareholder vote is an example of poor corporate governance. Obviously, he feels that way. Netflix is like, actually, this is the best corporate governance because like we're protecting ourselves. He called the 10% threshold remarkably low, discriminatory, and particularly troubling. And he also said that he believes Netflix's board holds way too much sway over shareholders in general. So when he's saying the 10% threshold is low, he's basically saying if you guys are going to enact a poison pill strategy, you should let people at least own 10% of the company, if not 15% of the company, because trying to initiate this poison pill as soon as someone accumulates that much ownership means that it could be triggered at any moment, which would effectively dilute all shareholders because then people could buy at a 50% discount, which would be bad. Netflix said the new stockholders' rights plan was not designed to block any future-friendly merger acquisition. The company has long been viewed as a likely acquisition target for a larger tech company. Apple had a chance to buy it. It did not end up buying it. Is that a good move? Is that a bad move? I don't know. And that's something management just might be receptive to, just on its own terms. So this has happened before. It hasn't really happened since 2012 in terms of a really, really big company that has a lot of brand recognition like Netflix being taken over by a hostile takeover candidate like Icahn, who is known to do a lot of hostile takeovers. A documentary on him just came out on HBO Max really a month ago. I haven't finished watching it yet, but it kind of shows his strategy towards activist investing. Now, the final thing I want to talk about is why is this different from what Elon's doing with Twitter? And I think it's a really unique thing to sort of discuss a little bit more. Elon and Twitter is not really corporatism taking over. This poison pill strategy was created in the 1980s to stop hostile takeovers from corporations, right? To stop institutional investors from coming in and just ruining a company. And more specifically, it's used when founders are leading a company. So when you think about something like Netflix, Reed Hastings, it's a founder-led company. It's a founder-led vision for that company. When you have a vision and you're a founder, you don't want anyone to mess with you. Because usually if you got a company to go public as a founder and it's a founder-led company, right? We're talking about Mark Zuckerberg. We're talking about Netflix. What are some other ones? Google to some extent, right? Larry Page and Sergey, but even though now they have more of a corporate CEO, like you did the hardest thing in the world, which is you took an idea and you brought it to the public. And as a founder-led company, you rarely want institutions or management or MBAs or PhDs telling you how to run a company. Because most of the time, only you know what it takes to get a vision out into the world from a business sense, from a strategy sense. Yes, you may not be perfect in all situations. Yes, you could benefit from strategic consulting and things like that. But to not have control over your idea, over your baby that you were able to take public, it's really hard for founder CEOs to deal with that, especially if they've, proven results. Netflix was proving results. 2012, it was not in the height of its growth trajectory, but it was getting ready to develop into this new streaming giant that the world just didn't know about yet because they were innovating the entire concept of streaming in the first place. If Carl Icahn had come in and ruined that company, Netflix would not have been able to enact and become the big company that it is today because maybe Icahn would have taken it over and sold it to Amazon or Apple or Microsoft or whatever, and that company would have just, been another company that we talked about, but it was never a big deal. Netflix is an iconic company, an iconic brand that creates iconic forms of content, even though I don't think their content is always the best, but it has some really, really amazing stories to tell. It's a storytelling creative media company because it was given the ability to grow. And it was protected from people like Carl Icahn. The reason I don't feel like that's the same with Elon Musk and Twitter is because Twitter is a company in which they've had a share price go down the drain or flat over the past 9 years. The experiment has failed. And share price doesn't always mean the company's good or bad, but it definitely reflects if the company's not innovating or creating product features or even able to get 5% of their counter Facebook's market cap because they're not actually doing anything interesting, right? They're not actually creating meaningful products and services to enhance the product. Now, I'm a user of Twitter. I like Twitter. But when Twitter IPO'd in 2013 for $29, and right now it's $47, you're talking about 9 years ago. It's been 9 years, no new innovations, no new solutions, no new products, no real interest in the company, no ability to show they can scale daily active users. I mean, they can't even get rid of bots that are on the company right now because I think they're afraid that if they got rid of all those bots, their 215 million daily active users might go down to 200 million because a lot of the attention on Twitter are bots and scams at the end of the day. So I think what Elon's trying to do is say that if we took Twitter private, we would have the ability to not have to be receptible to public shareholders, not have to show these quarterly profits or quarterly reports, and we would actually be able to create innovative products and solutions to ramp up the beauty of the product without having to deal with all the pressures of the public market. Twitter has not been able to show that their corporate board, and they don't have a founder-led company anymore because when they did have a founder, Jack Dorsey, his attention was kind of all over the place, didn't show he could prove results. Now Jack Dorsey's gone as of May 25th. He owns 2% of the company. The rest of the board barely owns 0.001% of the company. That was the other interesting news that came out over Twitter this weekend. on Twitter, that their board barely has any ownership in the company. So the interest of the shareholders is not necessarily aligned with the interest of the board because the board doesn't even own that much of the company. And there's not a founder-led CEO running the vision for the company. Elon is a founder-led CEO extraordinaire, right? Tesla is his baby, his vision. SpaceX, he has been able to take that to a different stratosphere. If Elon takes Twitter private and is able to create different solutions and products within it, I think that is fundamentally different than Carl Icahn and Netflix. I mean, at the end of the day, Carl Icahn was trying to take over Netflix and probably flip it. Netflix had a vision and they were able to use the poison pill to stop that vision, to allow that vision to be executed by stopping a hostile takeover. Twitter doesn't have a vision. I mean, increasing daily active users and getting ad revenue is not a vision. Like, you need to have a real vision for the most important town square that is in the biggest public, which is the world. It is the world's town square for people to be able to communicate and get information. So at the end of the day, I think that if this were to happen, Elon would actually be able to do something meaningfully well, not just be able to like have a corporate takeover that's necessarily hostile, because he actually wants to change the product and do something meaningful. And his motivations are not economic. I mean, Carl Icahn's motivations for Netflix were economic. Elon is like about free speech. So it's a fundamentally different paradigm for how he evaluates the company. Those are my thoughts on the poison pill strategy. Let me know your thoughts in the comments. Does this happen? I need to know. What do you think? Do you think this poison pill gets executed and Elon is diluted and he's not able to really get a meaningful bid for the company? Or do you think he brings in some other investors, they get up the price and they get this bad boy done, they buy Twitter, and they change the fundamental aspect of the world's biggest town square on social media? It will be very, very interesting to see and very, very interesting to cover over the next couple weeks. Thank you guys so much for watching. I'll leave the Money Talks episode in the description. You guys can check it out. We did 32 minutes of coverage on it. So hopefully you guys enjoy it, and I will see you in the next one.